Hello, I'm Sebastian. Welcome to 9 Trees podcast. Today, I will summarize and review the book. Options Trading for Beginners by W00D positions itself as a practical starting point for people who want to understand options without getting overwhelmed by jargon or complex math. Instead of treating options as a high-risk casino, the book frames them as flexible tools that can be used to shape risk, define outcomes, and potentially generate income or hedge a stock portfolio. It emphasizes common beginner pain points such as overtrading, misunderstanding time decay, and taking positions that are too large for an account size. A central promise is efficiency, learning a repeatable process that reduces decision fatigue and helps traders avoid costly mistakes that waste both money and time. Readers can expect an organized walkthrough of core option concepts, the logic behind popular strategies, and basic position management principles, along with guidance on discipline and planning. The overall tone is aimed at building confidence through structure, so a new trader can act with clearer intent rather than impulse. I will give you key takeaways from this book. Firstly, options basics that actually matter, contracts, Greeks, and expiration. A beginner-friendly options guide typically starts by narrowing the subject to what you must understand before placing any trade, what an option contract represents, how strike price and expiration define the deal, and why options behave differently from stocks. This book emphasizes that options are time-bound instruments, so your thesis must be right about direction and timing. It also highlights the idea of defined risk versus undefined risk, and why that single distinction should guide what a beginner chooses to trade. A practical introduction to the Greeks usually follows, focusing on delta as a proxy for directional exposure, theta as the cost of time passing, and implied volatility as a major driver of premium. Instead of treating the Greeks as academic formulas, the discussion is positioned as a way to anticipate how your position may react to common market moves, such as a slow drift, a sharp swing, or a volatility crush after news. By prioritizing these essentials, the reader gets a foundation for reading an options chain, comparing contracts, and understanding why two options on the same stock can have very different risk profiles. Secondly, choosing beginner strategies. From simple directional trades to safer structures, a core topic is how to match a strategy to an objective and a risk tolerance rather than copying what looks profitable on social media. The book focuses on common entry-level approaches, often beginning with buying calls and puts and explaining the appeal and the drawback, limited loss but a constant battle against time decay. From there, it typically introduces spreads that can reduce cost and clarify probabilities, such as vertical spreads that cap both profit and loss. The reader learns to think in terms of payoff shape and probability, not just potential returns. Another emphasis is the difference between selling premium and buying premium, including why selling can look consistent but carries risks that must be managed with position sizing and defined risk structures. The book frames strategy selection as a decision tree, market outlook, time horizon, volatility conditions, and account size. By doing so, it encourages readers to avoid random trading and instead build a small, repeatable toolkit. The underlying message is that simplicity and consistency can outperform complexity, especially when you are still learning execution, emotional control, and trade management. Thirdly, risk management and mistake prevention, the rules that keep you in the game. The book highlights that the most damaging beginner errors are rarely about picking the wrong ticker once, but about repeating avoidable behaviors, oversizing positions, holding losers without a plan, revenge trading, and confusing high premium with good value. A key theme is creating guardrails before entering a trade, such as defining maximum loss, setting realistic profit targets, and deciding what conditions invalidate the trade idea. The discussion commonly includes why options can magnify mistakes, since leverage makes small price moves feel larger and faster. It also stresses managing total portfolio exposure, not just trade-by-trade risk, so that multiple positions do not unknowingly concentrate on the same market factor. Another practical component is learning when not to trade, especially around major earnings announcements or high volatility events that can distort pricing. The reader is encouraged to standardize trade checklists and use position sizing rules that protect capital while skills develop. The result is a mindset shift. Success comes less from predicting the market and more from controlling what you can control, including risk, process, and discipline. Fourthly, building a time-efficient trading routine, planning, checklists, and automation. The promise of getting valuable time back is addressed through structure. The book emphasizes that many beginners waste hours watching charts, reacting to noise, and making impulsive trades. A more sustainable approach is presented. Define when you analyze markets, when you place trades, and when you review positions. It encourages the use of watch lists, predefined setups, and simple criteria for entry, such as trend direction, support and resistance context, and volatility conditions depending on the trader's style. Checklists play a major role because they reduce errors under pressure, ensuring you confirm essentials like expiration selection, liquidity, bid-ask spread, and risk limits before clicking buy or sell. The topic also covers the advantage of alerts and order types that can reduce constant monitoring, such as limit orders for entry and planned exits. By shifting from constant screen time to scheduled decision points, the book reinforces that options trading does not need to dominate daily life. The goal is a repeatable routine that improves consistency, lowers stress, and keeps trading from becoming an all-day distraction. Lastly, developing trader psychology, patience, consistency, and learning loops. A beginner options book is most useful when it addresses the mental side of trading because the mechanics are easy to learn but hard to execute consistently under uncertainty. This topic centers on how emotions and cognitive biases show up in options, where rapid gains can create overconfidence and rapid losses can trigger panic. The book encourages patience, selective trade placement, and acceptance that missing trades is part of a disciplined approach. It also frames consistency as a skill built through small repetition, not large bets, which aligns with a beginner's need to survive early mistakes. Another emphasis is creating a feedback loop, journaling trades, tracking what worked and what did not, and measuring process adherence rather than only profit and loss. By reviewing decisions, a trader can identify patterns like entering too late, choosing expirations too short, or holding through events without understanding volatility risk. This approach turns trading into a craft rather than gambling. The reader is guided to focus on controllable behaviors, such as following rules and improving decision quality over time, which can lead to more stable outcomes and a healthier relationship with risk. In conclusion, this book is best for complete beginners who want to start options trading with a structured approach, as well as stock investors who want to understand options for hedging or generating income without turning trading into a full-time job. It can benefit a reader's life by replacing random experimentation with a clearer process, understanding core mechanics, selecting strategies that fit a specific goal, and applying risk rules that reduce the chance of account-damaging losses. The emphasis on avoiding common mistakes and building a time-efficient routine is especially valuable for people balancing work, family, or other commitments because it encourages disciplined decision points instead of constant screen watching. Compared to similar beginner options books, the appeal is its practical framing around risk reduction, simplicity, and repeatability rather than hype about quick riches. By prioritizing defined risk thinking, trade planning, and psychological stability, it aims to help readers stay in the game long enough to develop real skill. If you want a straightforward roadmap to learn the essentials, trade with clearer intent, and protect both your capital and your time, this book is a worthwhile purchase. If you would like to support W00D, you can buy the book through the Amazon link I've provided in the podcast description. After reading the book, please let me know what you think and share your thoughts. See you around.